Just why are U.S. large cap stocks trading at record highs? And what can we look forward to in the new year? Well, our chief equity strategist and economist, John Blank, has those answers and more, and he even joins me in studio. So, John, even though we're at record highs with the stock market, there are still market headwinds out there, right?
Well, Terry, for sure. I mean, we just got news of a supposed phase one trade deal that leaves 25% tariffs in place on $380 billion of U.S. imports from China. We have news of potential tariffing of European Union goods, and we have a Brexit that is far from complete and likely to be contentious for an entire year. So trade and the resistance to trade groups and organizations is certainly one of the key headwinds for the next year.
So what's being done or what can be done to help alleviate those headwinds?
It's the usual story, the Fed, and then after the Fed, the BOE, the BOJ, the People's Bank of China, and the Bank of Switzerland, and the Riksbank in Sweden, and Banxico down in Mexico, and the Russian Central Bank. They're all following the Fed's lead. We're talking today on Thursday, and this is when those central banks are going to do what they do best, which is print money.
Yeah. So we talked about our stock market being at record highs, but the global markets are suffering and ours isn't. Is that why? For those reasons?
Well, I looked this morning about forward P valuations of the S&P 500 versus, like the MSCI international indexes. The MSCI has gone almost nowhere, price to book wise, price to sales wise, price to earnings wise, since the 2009 crisis. So what has happened, all this liquidity and low interest rates has driven money into the U.S. stock market. It's gone up, valuations, just every year after year. Now our valuations are close to those 2007 or even 2000 highs, depending how you want to look at the ratios. So the basic point is there's been no momentum on the international stocks. Some people are out there making some prescient call that there will be momentum next year for the international stocks. I wouldn't hold my breath. It's going to happen, but I wouldn't hold my breath.
So now as we end 2019, there's talk all over the place of this U.S. stock market melt-up. Does that rule out the notion that of a decline in market interest rates contributing to a price bubble in stocks?
No, Terry, it's the story, right? I mean, whether you're looking at the bond buying, the repo buying of the Fed or anybody else that's a central bank, or there's the call for them to be flat rates in their dot plot, or the call of investment strategists and chief investment officers from rate cuts in the next year in front of the election. No matter how you look at it, the support from the Fed and the bond markets and the rate markets is going to be there.
I keep coming back to the U.S. stock market because I think that's where the focus is right now with investors. Corporate earnings or economic data really hasn't corroborated the stock market rally that we've seen up to this point. So has the market gotten ahead of itself?
You could have said that same statement any time over the last 6 years, and as a P valuation rises, right? I mean, the point of saying something's overvalued is in the eyes of the beholder. I mean, to say 18's too high, and then next year it goes to 19, and then they say 19's too high because the historic level of the last 10 years is 15, and then it goes to 20, and you say that's too high, and all those comments are correct, and if you traded against that trend, you'd lose. So until the trend breaks, and the trend won't break until there's an actual bona fide recession in the U.S. data, I would just stay with excesses and ride them up.
And so is that where our stock market goes in 2020? Higher?
Higher. I mean, under the Fed's push, with an election in place where the phone call would be made to Powell if he stepped back on that, how do you argue that it's not going to go higher? The only way to argue that it's not going to go higher is you have a true feedback loop from the trade sector tensions into the GDP account such that there is a recession. And you have to remember that 20% of the U.S. economy is manufacturing, and a very small fraction of that is related to or exposed to China or anybody else that's related to China. So you're talking about taking anything that's happening there and cutting it down by a factor of 110 probably. So, for example, how much of the resistance in this trade concern is there in the GDP count, somewhere between 0.3% and 0.5% right now. So if you're doing 2.5 and someone tells you now you're doing 2.2, you're not likely to lose much sleep over that.
What about global markets in the new year? Just keep bumping along?
Bumping along. Again, there's calls out there for this prescient rise in the non-U.S. markets. And under certain scenarios, that can happen. And again, so when it does, and if it does, let the smart money run first and then get in behind them.
So if 2020 turns out to be another strong year for U.S. stocks, what's going to be driving that strength?
The Fed. We've talked about it a lot, and I can't say anything other than it's just the Fed. And but you don't fight the Fed. That's basically the point.
Right. And as far as global economies are concerned, we're logging in here a decade without an economic recession in this country. You see any material deterioration in our economy or others in 2020?
Not really. I think, you got a stimulus package in Japan to reverse things there. You have a new ECB head to keep things accommodative in the European Union. I seriously doubt England will do anything but just suffer through its uncertainty. And then you have China, which I believe is front-loaded a massive amount of stimulus in front of the election here, so they don't have to bother with Mr. Trump. So I think you basically have enough people backstopping everything everywhere in the world.
All right, meantime, stocks that you're keeping an eye on right now include LHC Group, Mantech International Corporation, and Mobile Telesystems.
Yeah, Terry, these names are not household names. So go ahead and repeat them for everybody, just so everybody knows what they are.
So we have LHC Group, which, with the ticker LHCG, Mantech International Corporation with the ticker MANT, and Mobile Telesystems, PJSC, with the ticker MBT.
So these tickers are not household names, and they are Zacks #1 ranked stocks in proper top-down spots. So I picked them because you've never heard of these names. So go out there and look into these tickers on Zacks.com and get familiar with stocks that might have underappreciation. Some of these, I think a couple of these are non-U.S. stocks. Mm-hmm. And if you're looking for that call on a prescient move into the non-U.S. world, these are the types of tickers you're looking for.
Chief Equity Strategist and Economist John Blank taking a look at the global markets and looking ahead into the new year. With John, I'm Terry Ruffalo. Here's something that you may want to take advantage of, by the way. For a limited time, you're invited to follow market insights, buys and sells from all of our recommendation portfolios at Zacks, and you can do it in real time, and you can do it for only $1. You can even look in services that have been exclusive only for subscribers up to now. So to do that, visit Zacks.com/promo. You'll get all the details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.